Good afternoon. Welcome to Norton's Mid-Year Commercial Forecast. We appreciate you tuning in to hear a couple of experts on what's going on in the marketplace. We have a lot of information that we're happy to share with you this afternoon. A couple of housekeeping items. Information that you see, the recordings will be on NortonIntelligence.com. Will also be on our YouTube channel. So after this, it will be recorded and you can go back and look at it. Also, during the presentation, if you have any questions, we'll be happy to answer those through our live chat. So please put any questions in there, and then we will answer those at the end or during the presentation as we can. So we appreciate you asking any questions as we go forward. So now I wanted to take a minute to introduce our experts that we have with us this afternoon. Mr. Stephen Lovett, he is a commercial partner. He has been with the Norton Agency for over 17 years, specializing in pretty much anything real estate, but you do a lot of industrial property as well as working with home builders, new construction, and investors. So we appreciate you being here today. And then Charlie Hawkins, who has been with the Norton Agency for 10 years, also a partner, and he does a lot in commercial leasing and office space, and we'll hear more about that as we go forward in through our questions. So with that, I just wanted to jump right in, talk about the market. Obviously, real estate is a top of the mind awareness. People want to know what's going on. We see it all through the news. You see some good things, some bad things. I know right now we hear a lot about recession, and we hear about falling home prices. We hear things about commercial office space. I know there's a few very big personalities out there talking about commercial office space in major metropolitan areas. And Charlie, I'll start with you on this. What do you see in the way of some of the diminished office space? People, not returning from COVID. A lot of businesses and industries have changed how they treat their employees. A lot more folks commuting or telecommuting, working from home, which has left a lot of office space empty. How is that impacting our market?
So the office sector is the most vulnerable sector of the real estate market. In our larger cities, we're seeing 20 to 25% vacancies. We're not impacted as much here in our own town of Gainesville or Hall County, but I expect that 20 to 25% vacancy to climb. We've got a few $1 trillion worth of refinancing in the next couple of years with our big city office buildings. So you'll see banks, they should start getting creative. Maybe there's an opportunity to repurpose some of these buildings, but as vacancies climb, interest rates are going to be double what they were the last time they had the loans on them. So
on the commercial side.
On the commercial side, that's right. But we're not seeing that impact here in the Gainesville Hall County market, but definitely more so in the larger cities, and that'll be there to stay for a while.
So do you think that there are a lot of businesses that as they've downsized or as they found to be remote in more suburban areas, that they're gravitating towards office space in a place like Gainesville or Jefferson are you seeing them come out of the major cities and expand to suburbia?
Yes, and we actually saw that a little pre-pandemic with the WeWork opportunities when, you can go back to the 90s when internet was introduced. The office market really went after talent, and talent was in major cities, but you introduced internet, talent became more viable and through the internet options. So came up the WeWork options, smaller options in the early 2000s. The pandemic just accelerated the inevitable, in my opinion, but you do see a lot of the major cities exiting into the smaller suburb markets that we're in, like Gainesville, Jefferson, up the interstate, where a lot of jobs, industry is moving out, better way of life, getting out of the city. Yep. So it's having a major impact quicker than what the internet was going to do in the first place.
So you mentioned that with internet. I know on the residential side, one of the first things that people look at when they walk into a new home is they look at their phone and see how many bars do they have on their phone, what kind of internet access do you have. Stephen, are you seeing that as far as on the business side as well, and not just internet, but infrastructure in general? Do you think a lot of these the developers' office space that they're looking for that infrastructure?
Absolutely. If they're going to come here, they're going to want to know that they can be in contact with people, right? That they could immediately get on and connect with people. People are looking for full service, it seems like, on these office spaces. They're wanting to be able to tie in, whether it's an executive suite or a main office, and have the exact same infrastructure they may have had down in Atlanta. It is interesting, what I'm seeing is some mixed-use communities across the country. Some of them are a little bit ahead of Atlanta area, so to speak, but one of the largest developers in the country, Brookfield, is doing a development outside of Charleston called Nexton, and as part of their master plan community, again, nowhere near downtown Charleston, they've got Class A office space, and they build it up front. So it's attracting people to move out there without having to have the commute into Charleston, and they're leasing those spaces. I've heard very much the same thing outside of Dallas and some of those suburbs, that you're having Class A office space built nowhere near a skyline, and they're leasing well. It is interesting, though, if you go back and you look at what the statistics are now. I totally agree with Charlie. The office, something has to give. When you have major companies, a client of mine who's closed many of their offices simply because they saw that they worked better without all the space. When they went to go open back up in other parts of the country like New York or other places, they say, all right, guys, it's time to come back into the office. And they said, oh, I can't. I've moved to Montana. And so, we're seeing the shift for sure, but some quick statistics. I think I saw that Atlanta has more space available for sublease than ever. Over 7.5 million square feet of office space is available for sublease throughout all of Atlanta. And another thing to watch, 2025 is going to be a big year on the radar, because that is when nearly 30% of the loans mature on office space in Atlanta. So we're going to see, as Charlie said, what happens when they go to refinance or sell, and cap rates are higher because they're considered more risky, and interest rates are also higher.
So the question is, does that affect just that segment? Does that affect the big investors, obviously Wall Street, but does that does that affect small town Gainesville or small town Georgia? Are we going to see that impact and on the global real estate market, or do you think that's just contained to those areas or to that product?
There'll certainly be some form of a ripple effect, I think, from some of these offices closing down or being repurposed, or just simply being vacant. There is a supply and demand factor. At some point, rates come up so much in the Cumming and Alpharetta and Gainesville markets to where people say, well, maybe I can go back to Atlanta again and afford an office space there. But I generally think that it's the areas in Gainesville, there's not been a big glut of office space built. Same with Cumming, same with other areas outside of what you would call the office core of Georgia 400 north of Atlanta. So I don't see it being a major impact here. I do think you might even see some things being constructed, but it's going to be interesting to see the impact that it does on some of those city office spaces, because they're going to use it as an opportunity to rebrand and rebuild and modify and attract the young talent that does want to be in Midtown and other parts of Atlanta that, frankly, Gainesville just can't compete with.
Yeah, you both mentioned, I think said the word repurpose. Charlie, what is that? Do some of these office buildings convert to apartments, condominiums? Obviously, there's a housing shortage. Right. Do they have the ability to convert to help some of the housing crisis?
Some, not all. And for the ones that can't make it, maybe you're looking at demo and rebuild altogether. But definitely there's an opportunity. That's such a catalyst event for the office market, just globally speaking. And there's a huge opportunity to repurpose those for residential, mixed use, maybe throw retail, office, and residential in these buildings. But municipalities have to buy into it, because I don't know that most zoning would allow for that as it is now. So municipalities, they're going to need to study that, look into that, because there is a large opportunity.
Yeah. Stephen, you obviously with all of this, we still see a huge increase in job opportunities in Georgia. We see a lot of growing industry, a lot of it, of course, moving out from the metropolitan areas, following some of the cheaper land. Infrastructure is a big part of that. But one of the biggest issues that we see, we have all of these large industries that are coming, but they need an employment base. And what they need with that is housing, obviously, for those employment base. You deal with a lot of builders, developers that are looking to build those either mixed use or single family developments. What is their attitude right now? I know we have a lot of top 10 builders, and what are they seeing, and how are they approaching this market?
Well, you nailed it with the jobs. The jobs are coming. There are jobs in Bartow County, Cartersville area. There's been over 7,500 jobs announced on factories that are being built for the EV plant, the electric car manufacturing sector. And we're seeing that as well. It's far down in Savannah. You look at the big mega plant, they call it, that Hyundai is doing down there. It's in Bryan County, but it's in the town called Ellabelle.
Yeah.
Who ever heard of Ellabelle before that, right? They certainly are going to try to employ roughly 10,000 people. There's not 10,000 people there. So you're seeing aggressive development happen in those areas. And so builders are bullish. They think they can sell houses as long as they can hit whatever the price point is the market calls for, and that does vary drastically based on locations. But the biggest challenge they're having right now is the actual infrastructure costs themselves, and that's putting a lot of these things to a halt. To quote an engineer that I won't name, but who's been in Atlanta for more than 30 years, he said recently, I have never seen so much demand in greater Atlanta with so little actually happening.
Oh, it's great quote. Yeah. Well, I don't know if it's good, but it's
telling.
It's telling.
Yeah.
It
Yes.
describes the market. Absolutely. What do you see? Is there solutions that they can come up with? You mentioned, for instance, Bryan County. I think that was a big initiative. I know Governor Kemp was pushing some opportunities outside of Savannah. A lot of those folks will have to look to potentially live in Savannah. We just, out of curiosity, looked at that market, and there was 11 listings for a market that has 10,000 new jobs potentially coming to it. So is that an opportunity for these builders? Are they looking at those types of environments and areas?
They are. The national home builders, the tract builders that can go in and put down a lot of inventory are certainly looking for that opportunity. They like Bryan County, which I know isn't really our region, but it's flat land up there, so that helps with some of the costs. The other factors that we're seeing in some of these locations is a little bit of a hot button topic, the build for rent communities, where you have a larger home builder that can build the homes, but some other group will come in with the funds to fund the construction and development and build, the numbers we're seeing now are 100 to 200 units. Just think of them as nicer apartments, really, but it's a neighborhood that you would drive through and look just like regular homeowners, except it's all rentals. And so we're seeing that fueled in these locations where there's a lot of job growth.
Seems like attitudes vary on that build-to-rent product. I think there are some, I think being in the residential business, we would love to provide houses for homeowners. There's obviously a large investor pool out there, and a lot of folks now just building specifically rental property because there's a big challenge with affordable housing, and a lot of people not able to come up with a down payment but they still need a roof over their head.
Right.
And so that's defaulting to these build to rent or to apartments. So on the apartment front, are we seeing that as well? Are you seeing that here in Gainesville? I know there's some big apartment developments here throughout North Georgia. Is that a trend you continue to see, Charlie?
It is, yeah. I see a lot of, every day I take a call from an apartment developer wanting land opportunities in this market, which, we're pumping the brakes on. From a zoning perspective, we've already entitled the number that we're going to entitle for the time being. So we're going to get a number of these out of the ground that you see are under construction and coming up now. So it's certainly hard to deliver a product. The American dream of owning a home is being challenged. So you have to get creative with solutions of apartment, rent to own, and so that's what you're seeing. But yeah, there's all kinds of housing needs still in demand right now in Northeast Georgia.
And do you think with this build to rent, especially some of these single family units, that they are standalone? They may not individually plat them, but they might. Is that a potential end game for some of these developers to say, yeah, we're choosing to rent, but we're also designing that if there's a point in the future, we could sell them individually?
I'm seeing very few actually do that. Okay. A lot of times their lenders like the thought of it being one parcel. They get one tax bill. The municipalities like it because if there's a problem, there's one person to call. So I think that there's some that are doing that. They're very much the mom and pop type, but the institutional type have no desire to do that whatsoever.
So most likely will stay as build to rent.
That's right. They're going to run it just like an apartment complex. They're going to have a leasing house that's a model home that you can tour. They're going to have an amenity. They're going to paint them all at the same time, roughly. They're going to have scheduled maintenance and a routine deal where they're not the subdivision or the homes aren't subject to the whims of a particular homeowner's certain pocketbook at that moment in time. If somebody loses their job, they're probably not going to paint their house. Versus the REIT behind this is going to say, we have to maintain it. That's the way we keep the integrity and keep the rents that we're getting.
Right. And do you think, from a consumer standpoint, the pet industry is a huge industry. We see we get it on the property management all the time. Do you take pets? And we encourage all of our landlords to, because there's such a huge demand. I think that's where the single family product versus the apartment living, because people want a yard.
That's right.
For their kids or for their pets. And so do you think that becomes sort of, I won't say replaces the apartment, becomes more desirable than the apartment?
Well, I think you touched on it. It's a certain segment, right? Somebody who's maybe working at the hospital, who's working long shifts and only going to be here for a year or two, may not want a dog or may not want that yard. But there's certainly people who do. And what I'm hearing statistically across the nation is whatever the best apartments, the nicest and newest apartments are in that location, a build-to-rent community right next door that is single-family homes will get at least 10 to 15% more in rent because you're capturing that more of a homeowner rather than an apartment dweller.
And for the developer, is the expense greater since they may have greater cost for landscaping? Since it's not all under one roof, you've got four walls, roofs, you've got infrastructure, all of those things. Does that become a little more expensive?
I think there's some trade-off because certainly when you go vertical on buildings, you're starting with sprinklering and certain type of code requirements. So I think there's a trade-off. I would say on a per unit basis, it's certainly more expensive. On a per square foot, I have not looked into that number yet, but I would say there's certainly some trade-offs in that, but they're able to make the numbers work.
From an investor standpoint, it's probably a better product to have because the exit game is you could sell them if you needed to.
Sure.
But why would you want to sell them when you're making more money and it's continuous income for whenever you want to make that income?
Well, I think that's what we learned from the recession in 9, 10, and 11 is that we had these large investment groups came in and bought lots of houses, single-family houses, turned them into rentals. I know the end game for a lot of them was they wanted to hold them for about 10 years, and then they would put them back out of the market or sell them to another entity or another group. But a lot of them didn't do that because they had such great success and their rents were escalating so quickly that they were just more profitable to do it that way. So it's sort of a interesting byproduct that I don't think was really ever intended. It just sort of gravitated that way. And now, obviously, looking at the build-to-rent product. So another big component of all this, and we talk about things like affordable housing and all that, and obviously the cost of land and the cost of goods and labor and supply chain issues, all of those things that go into that. But one of the biggest hot buttons, I think, is infrastructure. Obviously that's a challenge for almost every municipality across really the nation, is that they have to look at this growth. We obviously see this major growth to North Georgia, to the Southeast in general. So what do you see in the way of infrastructure needs, and what are some of the municipalities doing to manage that?
I think that's the biggest challenge, and we don't talk about it enough. I mean, there's not enough sewer water to go around for these municipalities that are seeing this growth. So that's our biggest challenge right now. As far as the immediate and long-term plan, I'll defer to what y'all have heard because each day is new, but the need for it is here because growth is coming whether we're ready for it or not. But that is definitely slowing down the growth capability that we need today to sustain these jobs that are now in this market.
And it'll lead to missed opportunities with municipalities aren't ready. We're already seeing it now with some municipalities that are simply saying they're out of water. They can't give water. You may have a development that's coming in, but they're not going to give you a letter. And the other thing that we're seeing is sometimes they're requiring you to turn in fully engineered drawings on a project before they'll give you commitment on water or sewer. Well, if I'm going to spend $100,000 to $200,000 on engineering, I sure want to know that water and sewer is there when I'm finished.
Sure.
And it's like the chicken or the egg, and it's leading to this situation where things just aren't happening because you might as well go to Las Vegas and put it on black rather than hoping that they have water and sewer when you finish your $200,000 engineering project. So
There's a stall in the market.
absolutely in certain locations, and there seems like some that are getting ahead of it and planning and working through that. They all are aware of it. They all seem to be working at it, but it is no quick fix. Takes years to build a sewer wastewater treatment plant, and it seems like people are kind of getting the message now.
Yeah. And, it's like they say, when's the best time to plant a tree? 20 years ago. When's the best time to do sewer? 20 years ago. Right. And that's been, we're always playing catch up. And you're right, chicken or the egg, which comes first. And I do think we're hearing from a lot of community leaders. They see that challenge. Hopefully they'll be addressing that, trying to figure out, because the growth, whether we like it or not, is coming. Georgia has seen, over in the last decade from 2010 to 2020, over 1 million people come into our marketplace. 1.1, as far as numbers, we're the third fastest among the states. Only Florida and Texas are ahead of us. So again, we're going to get the growth. It's not a matter of if. So obviously infrastructure is a big component of that, but what you have to have before you have infrastructure is raw land, right? You have to have the dirt. So Stephen, what are you seeing the appetite? Obviously I think we've seen a lot of people go out to suburbia. We were talking about the office space coming out, which obviously subdivisions sort of chasing maybe more affordable land. What is now that appetite for these developers?
There's still a lot of appetite for raw land. I will tell you, a lot of them have cooled on raw land over the last 6 months, simply because they're trying to get to the finish line and deliver a product, whether it's a house or a industrial building or what have you. And so really they're trying to zero in on what are the properties that have a permit in hand, because if they have a permit in hand, everybody's out of my way and I can go build today. Nobody can stop me. If it doesn't have a permit, but at least it's zoned, well, then you're just dealing with planning and engineering and working through the property, and you're working towards that permit. But we've had situations where people have passed on property because it's not zoned, because they look at it as too much risk. You go in for a neighborhood that may look very similar to what was developed next door, and that may have been approved 5 years ago, but the code has changed and they won't approve that same deal today. So you don't really know what you're going to get, right, or how long it's going to take you to get there. So there seems to be a little bit of a frenzy for things that are ready to be developed right now. And then as far as stuff that's not entitled, not zoned, there's still interest, but it's not the frenzy that we had 12 to 18 months ago.
Are you seeing areas of the state that maybe are more proactive with doing exactly what you said and getting that property zoned ahead of time?
Very few.
Okay.
We're seeing some. I think there's a disconnect between what's going on in the planning offices and what's going on with the commissioners or the council members. I think the council members and commissioners a lot of time thinks that things are moving quickly, but it seems like a lot of times I'll talk to some and they'll say, how did that project go that we zoned 6 months ago or 9 months ago, 12 months ago? I'd say, I don't know. We haven't got it permitted yet. And they're shocked to hear that it hasn't been permitted. But there are some certainly that are proactive and are welcoming, and it's refreshing to go in there and try to get business done. I'll say Hall County and Gainesville is one of those, right? I mean, Hall County and Gainesville is a great place to be, and so we need to protect it. But at the same time, when you go in there and try to do a project, it's not crossed arms. It's open ears and trying to figure out how do we get this approved or something that at least the community will be happy with.
Sure, smart. Also in the raw land, I know this sort of the COVID effect. I can't tell you how many people were asking for 50, 75, 100 acre tracts of land, wanted to build their little cabin, have their little farm or hunting land. Is that a trend, Charlie? Are you seeing that? People still looking for that?
I do, yeah. I still see people looking for that product. I think it's kind of cooled off though this year. As far as from my desk, my phone ringing for it, there's not a lot of inventory out for that though, so that's kind of the other end of the spectrum. We certainly need more inventory, but yes, there is still a demand for that. People still have money and are still looking to get little tracts of land.
Do you think part of it too is because obviously with that demand, those land prices have obviously escalated, sort of maybe pricing themselves out of the market a little bit too?
Yeah, I'm starting to see some people start to realize that, hey, because my neighbor of 40 years got X, I don't necessarily deserve X plus 20% or 15%. Right. Every sale is not going to be more per acre than the sale just before. And so I think we've kind of see that level out. I've actually started to see some people give price reductions on land just because they're ready to sell. They've already made up their mind over the last couple of years they were going to sell. But yes, things have gotten kind of a little bit out of hand for what recreation land is truly worth. There's only so many people who have $1 million liquid to go buy land, right? There's a lot of people that would love to have it, but there's no loan product out there for that type of purchase, or very rarely are loans done on raw land purchases. But I think there is still a fair amount of demand. The biggest issues that I'm seeing is most of the demand is the people who want 5 to 20 acres, who want to spend $100,000 to $400,000, and there's just not that many tracts of that size and price out there.
And are those same folks, are they looking just for obviously their specific use, or do you think they have in their back of their mind, hey, this is also a potential investment for my children or grandchildren that potentially could be a commercial development one day, a residential development one day, or are they just looking or kind of ignoring that? Because I go back to infrastructure, right? I mean, yeah, I want this piece of property, but I want to know, is there a natural spring on it? So do I have water access? How close am I to sewer? How close I am to internet access? All those things we talked about. So are they still looking at those types of things as well?
We run across all kinds of buyers, and there are certainly some who have their list down to a T of this is exactly what I want because I intend to use it and have a great time, and in over 20 years I'm going to make it into something really special, and at some point me or my children will be ready to sell. But then there's also people out there who say, hey, my financial advisor said I've got about $1 million to $1.5 million in place in land. Find me something that's going to be worth a lot more in 5 or 10 or 15 years. And they may never even go look at it. It's more of just an item on the balance sheet or in the portfolio. Speaking
of, does that, y'all still see a lot of 1031 exchange money, a lot of folks looking to park money just for that purpose because, the CPS says, hey, we need to move this money?
I've got a few that are still out looking for 1031. I've got more that their 1031 opportunity expired. There was no inventory for them to buy. My buyers are probably a little different from Stephen's, but the price point of the guys that I generally work with have been outcompeted for some time now. We can't compete with group money or large money buying on 3.5% to 5% cap rates. Where I serve more clients that are 6 to 8.5% cap rates, which we haven't seen for some time. But yes, I do have a few that are out there with 1031 looking for opportunities, but there are a few opportunities.
Yeah, they've been tough to convert of late, simply because the buyer who has something to exchange into is not seeing the value they're hoping for. Whether it's investment property, they don't feel like they're getting a good enough return when they can go to the bank and get 4.5%, 5% risk-free. And then on the raw land side, they feel like they're kind of buying at a top portion or at all-time highs, even though I think we have room to grow here in Atlanta, but they're looking at it on historical levels and saying, I don't think it's a good value. So they're paying the capital gains, which are still painful, but it's not the same as ordinary income for a lot of people that are selling those properties.
Yep, that makes sense. You just kind of said it, but talking about the growth, Metro Atlanta, obviously one of the major metropolitan city, probably seen some of the fastest growth in the nation, continuing to expand out. We're fortunate here in Gainesville, Hall County, that they've announced, of course, this inland port that's going to go up 365 for us. Obviously, not necessarily a ton of jobs specifically with the inland port, but it is certainly going to maybe bring some other feeder type companies with that. What do you see as far as the advantage, or is there advantage? What is the opportunity with that inland port coming to Hall County?
Yeah, I think that's going to be a game changer. I mean, I think truly time will tell on that. We've already kind of been considered a logistics hub. We have a lot of logistics companies here, spun from the chicken capital of the world. But the logistics or the inland port is certainly going to provide opportunity for other type of users and more industry to come in.
Yeah, it's interesting. I think I think we'll see an impact here locally, but I think first from a macro standpoint, Georgia, the state of Georgia, the whole point is to get those trail cars out of the port in Savannah, right? And so I heard the statistic that the Port Authority is hoping to bring the dwell time, which is basically from the time they take that trailer off of a boat and onto somewhere right there by the port to hold it. The dwell time they're hoping will go from 6 days right now to 1 or 2 days. So that means that those carriers are getting off quickly and going towards a destination. It should eliminate, or not eliminate, but reduce some truck traffic that goes through Atlanta straight from here.
Yep.
What was also interesting in that is that it also is trucks are faster. You can get in a truck and go 70 miles an hour on the interstate and cruise and go straight, versus a train. It's not quite as quick, but it's steadying and getting it off there. And getting it to Gainesville, and a lot of the local businesses, the Havertys, the Bed Bath & Beyond, the other groups that have the Carter's Closing, those types of companies will have a huge benefit of it. I can't wait to see what it's going to do for Kubota. I'm sure that they're excited about it as well. But I think it will lead to opportunities here in this area to be able to get things to and from the port more quickly.
Yeah, and you think more industries will flock here because of that as well?
I do think so. It's going to take time, certainly. I do think so. But yeah, I think we'll see companies want to be here or closer to here because it is a faster way to transport.
So perfect segue. So transportation, right? So you mentioned 365 and becoming that transportation hub. Obviously, we have some major corridors throughout North Georgia, I-85, 985, I-75, I-20. I mean, major roads that head up the East Coast, out west. We certainly have become a hub. Atlanta has been a hub for many years. But again, we're starting to see that move north because a lot of those major pipelines are coming up through these areas in the North Georgia market. How do you see that impacting us and in North Georgia?
I think that the growth is going to continue to happen. People are going to continue to drive cars. We were told forever ago we'd have flying cars. We don't. We were told very recently we'd have autonomous cars, and we still don't. Right. So we haven't seen any impacts from those types of things yet. But again, the growth continues. The in-migration from other parts of the country, I think, will continue to add to residential traffic. It sure seems like people are still commuting to work somewhere when they're out on the highways now. But it does seem like there's been some good planning ahead. And specifically, I think of Highway 129, which connects from Gainesville to Jefferson and I-85 to Athens, and the inland port will send trucks right along that route, and they kind of got ahead of it. And it seems like now it's you drive out there now and it's luxurious. There's not many cars, but again, when the inland port and all that coming, they've kind of gotten ahead of it. But I think we need to invest in infrastructure. Everybody can pinpoint to a corridor that they drive by now and say it's too congested, and there's things that can be done about that with the right planning.
And the feeder roads, like you said, 129, I think some of those that are highways and pretty good ones, they will continue to see more traffic, obviously, as we see this growth throughout North Georgia. What do you guys, so one of the things we used to talk about many years ago as we talked about these transportation corridors is obviously the extension of the metropolitan area. We used to kid that, eventually the Atlanta city limits would reach Chattanooga or Greenville, Spartanburg. Are you seeing a lot of things start filling in those gaps? I think, I know Dalton's doing a big push to have industry come to them. Obviously, Anderson, South Carolina, look at how they've changed. Greenville, South Carolina, how they've changed. Is that a trend that we'll continue to see?
Yeah, absolutely. I think so, especially in an area like Northeast Georgia where we have such a diverse industry, blue collar, white collar, medical hub here. It's growing fast. We're already in each other's backyards because the technology allows us to, but you're definitely going to see these corridors fill in over the next coming years. It's all about infrastructure and how quick can we get that delivered.
And Greenville's done such a great job of making it a destination place now and a major employment center with BMW and others, and you've got Clemson right there. So you're seeing now a push for housing in places like Livonia and Hartwell, where there is a need and projects are getting improved, and we're starting to see stuff coming out of the ground close to the interstate in particular. So yeah, I think you will start to see those things start to fill in more and more, and the more those municipalities are proactive about those projects and getting them approved and getting the infrastructure there to them, they'll start to see the things they all seem to want there, which is a restaurant or a coffee shop or those sorts of things. But I do got to give credit to, you go to Livonia now and you drive around up there, and there's a lot more going on than people recognize in a location like that.
Yeah, I think just filling in the gaps.
Right.
I mean, that's where you got to follow the opportunities. Well, last thing that I wanted to leave our viewers with is if you guys had one thought, piece of advice, whether from an investment standpoint or real estate, one of the questions, is it still a good time to buy? Is it still a good time to invest? If so, you know, what does that opportunity look like? You know, is there a product? Is there a location? If you had a magic wand and said, hey, this is where I would put my money today, what would you do?
I would probably go up one of the filler areas between these major hubs. I mean, maybe look up 85, where you have a large injection of industry with very little housing. There are some housing demand all over the place. So really, I would look for raw land around interstates as the major cities grow in between the two.
Yeah, that low inventory in housing is just, it's kind of fueling everything. And that seems to be, I think, an opportunity across the board. Stephen?
Yeah, I mean, I would say any opportunity to invest in North Georgia and Northeast Georgia is not a bad one. You look at where these people are moving from California, Northeast parts of the United States. It's become very affordable to move here. And you look at, you know, what happened in real estate in Los Angeles and other areas around there. You know, once the population really started to grow in Los Angeles, what happened to that recreational property? It became almost priceless, right? Yep. People could afford to go out there and spend all kinds of money to have that hour retreat, so to speak. So I would just say, you know, really engage myself, Charlie, or someone else at Norton to help you understand what truly is value and look for value in every segment, because I do think we're in a time where people are saying we're at historical highs in Georgia, but at the same time, comparatively nationwide, it's not that high. I think you have to have the approach of buying along the way. Yep. And selling along the way up rather than trying to time things, because you just won't be able to do that.
Yeah, we just don't, land prices aren't coming down anytime soon. So no cheaper time to buy than today, right?
I agree.
Absolutely. Well, I appreciate you guys being here. You said it, but I want to say it again, is that please reach out to Stephen or Charlie. They can certainly help you with any of your real estate needs. Obviously, you can see their expertise and all that they have to offer, and we certainly appreciate them being here today and offering your thoughts on what's happening in today's market. So again, thank you to all of you for tuning in. Again, we'll take a look at the questions. If we haven't answered them yet, we will reach out to you via email if you leave us your email. So again, thank you for tuning in, and appreciate you being part of the Norton Agency.